The last panel of the day, this is a tough one. It's been a long but fascinating sessions today. It's a real eye-opener and certainly a call to action. But hopefully you can bear with us and keep the energy going. And for this last panel, I am joined by a real stellar lineup of industry experts. So we have Chris Elms, the Chief Executive Officer from Euroclear UK and International. We have Kevin Sampson, who's the President of CDS at TMX Group, coming over from Canada for us, so thank you for that. Chiara Rossetti from Euronext Securities, and also you have an active role in Exeter as well. Yeah. And yourself. So Ekrem, now you are obviously MKK Turkey, but from Exeter Sister Association, the Association of Eurasia. Yes, a CSD, so thank you for coming. And a guest from the EBRD, so Ekrem, it's lovely to have you here, Attila, sorry, lovely to have you here bringing a different perspective to the group. So hopefully we can touch on your experience here as well. And also you are formerly from Keller, right?
I'm from the stock exchange.
Yeah, okay, perfect, great stuff. So international coordination and convergence, it's not new to this industry. For many years now we've had to, and thankfully, work well together globally. The financial crisis of 2008 really sort of triggered that really. A series of structural reforms ensued to create a more stable and efficient and resilient ecosystem. But just having listened to the panels today so far, and the call to action on EU growth and competitiveness, accelerated settlement, my favourite topic, DLT, new asset classes, perhaps we need a call to arms for greater global coordination and convergence. And this panel is going to touch on some of the benefits of that and touch on some of the impacts of divergence. So, yeah, I should also say, last panel is always tough. And harmonisation is definitely alive and well in this room because so much of what we were going to touch on has already been mentioned. But hopefully we're going to bring a different perspective to the floor. So, touching on growth, I think it'd be remiss of us not to do so. And Chiara, I'm going to start with you first, ladies first. And just touching on from the Euronext experience, what do you consider to be the main challenges from a cross-border issuance point of view? CSDs play such a key role in supporting issuers. So what are your experiences there, please?
Thank you, Agma, and good evening, everyone. Thank you for having me today. And just to let me thank also EXA and all the colleagues of policy working groups that allows me also to reflect on those topics in the work we do together. And of course, today I'm representing Euronext and going to your questions. You said it right, CSDs play a key role. And the challenge to me is to reinforce the relationship we had with the issuers right now, because we have been hearing also during the day that we are seen as the plumbers, that we need to transform ourselves in the engine of the growth. But these, to me, goes through the reinforcing the relationship with the issuer. We should not forget about the fact that we are the first market infrastructures that issuers approach when they approach the capital markets, actually, and in the operation of the capital markets. And this gives us a lot of opportunities to support issuers, to support them in structuring the operations and identifying the best solution and the most cost-effective solution also for their own raise of capital. And in Euronext, we are, of course, going through that path, working on 3 levels mainly, which I believe are the 3 levels on which all the industry is working. The first is the operational efficiencies. We are always strive to perform and to streamline the operations of issuances, process, corporate actions, also through the through the investments in innovation and in new platform and in standardizations that we offer to the issuers. We are working also at the business level, as mentioned, in order to support issuers to reach out to all of the investors, not only across, of course, the jurisdictions of of Euronext jurisdiction, but all across Europe, through links and through the market infrastructure that we have in the group, and on which, of course, we leverage about the competencies that we can bring also to the issuers. And third, all together as an industry, we are working also at policy level. We are I think that the entire CSD industry is in a very good moment to contribute to the next level and to bring forward the integration of the capital markets. It's important that we do not lose the momentum, but as mentioned, we have been discussing about harmonization of securities law, about harmonization of company law for ages, and we can discuss again for ages. Maybe we need to take the right, it's a point to take the right perspective to change it. And I think that the issuer perspective is the right one. We need to identify the barriers that are creating costs and less virtual cycle to allocate resources for issuers in the raising of capital, meaning the fiscal one, but also some aspects of the company law and some aspects also of the management of the issuances that are currently limiting the possibility of issuers to reach out to different investors across Europe and also internationally.
Perfect. And talking of internationally, Kevin, I'd like to bring you into this now. Does this resonate with you from a CDS point of view?
Yeah, I'll take a little bit of a different perspective on this, and picking up on something I think Phil Brown mentioned on a panel earlier, in that fundamentally what we're looking to do is, and certainly in Canada, given kind of the relative size of our market to Europe and the US as well, we're really looking at attracting investment for our listed issuers in our market in Canada. And we do that by building trusted, stable, resilient markets. That's fundamentally what we do. And if we take a look at what issuers, what's important to them and what they're tapping the public markets for is liquidity and access to capital, as was mentioned. And so I think with our focus on how can we create an environment that can be most attractive to global investors to provide increased capital opportunities and liquidity to our market. And that's fundamentally the view we have. We have about 3,500 listed issuers across the Canadian exchanges, across Toronto Stock Exchange, TSX Venture Exchange. It represents about $4 trillion in market cap, and the CSD holds about $7 trillion in assets. And so it's a fairly sizable market, but we're not going to grow unless we bring in increased capital to our investors. Or to our issuers, and also to ensure that the markets that are operating are done in a way where we're maximizing liquidity, maximizing efficiency, so the intermediaries, i.e. the broker-dealers, liquidity providers, treasurers at our market participants, have the capital that they need to add that liquidity to the market and do that in a risk-managed type of way. So it's an ecosystem view. And certainly in a market like ours that, unlike Europe, and it's very interesting for me listening in on all the panels of the day and some of the kind of unique issues that Europe has related to fragmentation, multi-jurisdictional. It's a lot of things, obviously, you all know in the room better than I do. In Canada, we're a very singular ecosystem, and that allows us to focus and make an impact with the less diverse set of stakeholders that we have across the Central Securities Regulator, Central CSD, CCP, vertically integrated exchange group, and a fairly limited domestic participant base. And so it's all about creating and maximizing and optimizing efficiency, liquidity within those markets so that we can ensure that our listed issuers are getting a good experience and will attract more of them on a global basis to the market.
Yeah, great, thank you. And issuers, I think, obviously, is a really important topic. And Attila, just to bring you in on this, did the comments from Chiara and Kevin resonate with you? Is there anything you'd like to add from an EBRD point of view?
Yeah, definitely. What Kevin said, exactly the same, but I wanted to emphasize on the issuer's perspective. EBR is an issuer, also an investor in many markets, but I'm not here because I'm representing that banking team, but I'm on the capital market infrastructure development team. And I think for the issuers, the most important is where they find the biggest capital pool for them. And but here, I think we need to make distinction between the bigger issuers and the smaller ones. And I think the capital market should be built on the smaller ones, the pipeline of the smaller issuers that hopefully in the future will become the blue chips in a couple of years or decades' time. But meanwhile, the big issuers can easily get the access to the global community, but the smaller issuers need to rely on the local and the regional investors. And I think that's the key to rely on, again, the ecosystem, I think the keyword, on the local and the regional ecosystem. And I think the very good example is Sweden, again. Sweden, that's a small country. It's only 10 million people who are living there. So it's really a global perspective, it's a tiny country, but still it has a very vibrant capital market. And if we take a look at the reasons why they managed to build up this capital market, is of course not because of the consolidation of the infrastructure. It has a role because there is a more or less a single Nordic market. But the main reason is how they built up the local ecosystem in Sweden, how they managed to build up the local investors' capacity. But the bad news for the whole Europe is that capacity was built up not in 2-3 years' time, but in some decades. So there is no quick solution for that. And I think that's the big problem whenever we are talking about CMU and capital market consolidation, that there is a threat, I think, or many countries are afraid that consolidation in CMU means losing or weakening the local ecosystem. And that's a major problem because we need to get rid of this market fragmentation in a way that we not weaken, but strengthen the local ecosystem at the same time. So I don't believe that we can have one single stock exchange or single CSD. That's never happens, I think. And it's not a good solution. I think what we need to build is a very strong and interlinked network of the local ecosystem in Europe. I think that's the maximum what we can achieve.
Yeah, I agree with that. Great. So I think moving on to nuts and bolts and operational convergence, a topic close to my heart. And I think we'll start with you, Ekrem, from the Turkish CSD point of view in the Eurasia region. What benefits can international links bring to your participants and investors? What are your views on that, please?
Okay, thanks a lot. First of all, great thanks for ECSDA for this great organization, and thanks for this question. Actually, from the point of view of regulations and operational convergence and international relations with other countries and investment ecosystem, I want to give real examples what we are doing as Turkish capital markets. Omnibus accounts, for example, one of them. In year 2020, we established the infrastructure for omnibus accounts for international collaboration with other countries. And Euroclear is a member of us. We finished all taxation, reporting, and all other legal issues, legal things. Euroclear is a member of us, and I can share also some numbers regarding with it. Before that, also Azerbaijan in year 2022, they became a member of us in January, and then at the end of the year, we became a member of MDM, Milli Depozit Merkezi, the CSD of Azerbaijan. And we are working with Kazakhstan for bilateral link again, and Tajikistan. We are trying to establish the same connection, the same link with them as well. I think actually when you first finished everything legal and infrastructural kind of things, it's already done. And for example, Clearstream or any other companies can come to Turkish market and become a member of MKK. Since the policy change in government actually with higher interest rates last year, Omnibus account was so active actually. I can share just very simple numbers. Almost 1.3 trillion Turkish liras of government debt securities under the depository of MKK, which is the 21% of whole volume actually. And almost 70% is in foreign investors, and almost half of that percentages in Omnibus account. So it's very beneficial for foreign investors actually. We are trying to establish the same link with other countries as well. And I can give also another example. For example, the double quotation of TOKO and OIKB, Austrian exchange. We built the SWIFT network. We established our SWIFT network just before that double quotation business actually. I mean, of course, operational convergence and international standards are generally coming our the daily business when you need it. I mean, if we collaborate and integrate our business with other countries and regions, it's a need to regulate according to the international needs. For example, T+1 again for European countries, as we all heard. 3 years later, it should be finished. It will be alive, and should be also for us, of course, an issue. And we started as the exchange, Borsa Istanbul Exchange Group, the CCP side, CSD side, and also market operator Borsa Istanbul. We started to work on it to be ready when it's alive in Europe. And I can additionally say also that maybe it's a chance or responsibility for such a country, I mean Turkey. We are just in the intersection point of the continents. We are just the beginning of October. We made such a conference, such a summit with 2 regional associations, ECSD, the Eurasian side, and AMIDA, Africa and Middle East Depository Associations. We are members, active members of also those regions, and also ACG, Asia Pacific Group, and also ECSDA. So we are trying to regulate and connect and communicate and collaborate everything according to all other needs and regulations. Because you cannot develop your market just by your own. You need to collaborate, you need to develop all other countries, together with all other countries actually. For this question, maybe I can add as the last point. For example, we are trying to develop another project to make account opening processes faster for foreign investors. We will be building structure to keep all paperwork centrally in MKK. And when you go to for example, if you have account in a financial institution and you go to another one, it will be centrally processed. Not you will be working again and again for all paperwork or all other legal procedures separately. We have such a plan, just as I told, to communicate better with other countries and foreign investors.
Lovely, lots of food for thought there. Thank you so much. So Chris, bringing you in, I think one of the clear messages we've heard today is that markets are increasingly global, whether that be the indices that are multi-listed securities, investors investing outside of their national borders. Keen for your insights on how CSDs can help to reduce the operational friction for cross CSD settlement, especially with T+1 on the horizon.
Okay, so thank you for the invitation to come and speak today. I really appreciate it. I think the great thing about being on the last panel is that everything that needs to be said has already been said.
We're done.
Yeah. So I'll just summarise a few of the points that have struck me during the course of the day. I think central to everything is that we're here to promote growth. We all want strong economies in our own countries and within Europe. We all want wealth to grow within those economies, and also we want deep and functioning capital markets. So growth is central to everything that we're here for. Part of that growth comes from attracting issuers, whether they're local or international, and making sure that they have easy access to the markets, and the investors likewise have easy access to the local issuers, but also those who are elsewhere within the world. So one of the key elements that sits behind that, and just as a quick sidebar, I noticed that everyone was able to say this throughout the course of the day. I will not be able to say it. It's a word I struggle with. Interoperability. So it's a prerequisite, I think. It's about ensuring that we as CSDs and the CSD community are willing to be open to each other. We are willing to set up links between each other to allow this flow of capital through the markets from the issuers to the end investors and back. I think it's come across today as well. Clearly, it's not just as simple as opening an account in another CSD. One of the challenges that sits behind interoperability is the issuers have to abide by the rules and legislation in their home country, but they also need to adapt and adopt to the market practices in the other jurisdictional country that they're trying to offer within. And I think that sometimes that can be a challenge. And that's really where we as CSDs can help them. We, as local CSDs, we know the local market norms, we know the requirements, so we can give great assistance to the issuers themselves as they come to the country. The innovation is another area. There was a great panel earlier which was talking about innovation, and I think that's somewhere where through innovation we can start to reduce friction for everybody. I'm not going to sort of dwell on that because I think that was well covered earlier. And the topic of the moment is, of course, T+1. So there is friction within the system. There's a difference between the US, Canada, and a number of other countries, and Europe and the UK. We've got a pathway now, or we've got a date when that friction should start to ease. And clearly, there's a lot to do between now and October 2027. But I think once that's done, both from an EU perspective, from a UK perspective, and hopefully the Swiss as well, that really will start to reduce friction within the system too.
Thank you. And I think friction, I just want to dwell on friction, be negative for a moment, but the US migration was a huge success. But one of the friction points was the dual listed securities. So while Canada was thought of, I think, early on, EU, UK wasn't. What were some of the repercussions, Cara, from that omission, I would call it?
Well, first of all, probably it's a lesson learned. Even though I'm having the possibility to join the discussion when we were under pressure of defining a sort of standards and understanding what were the impacts in a very short time frame, I was really impressed about the industry response. Maybe it came a little bit late in the process, but actually the discussion were very, the industry was very responsive, even though at the end we as we all know, we didn't manage to get one single model to apply to dual listed, but actually it is already providing the transparency to the market and having at least knowing at least what is happening in other markets, to me was really a good achievement, and the response that the whole European industry may testify that even though we are talking about fragmentation, actually when there is a need we can provide quite good responses, as I hope we will be for T+1. Migration, and in this context, of course, the EU, UK, and also Swiss market are very interconnected, more than we were with the US. So I'm happy to hear that we are going to continue to work together on the parallel timelines. I guess that probably this does not prevent us also to assess the scenario where there are some frictions or some differences in the timeline due to whatever reason. And therefore, probably we support and encourage the establishment of a key relationship and working groups that will allow to analyze between the two markets the potential impacts and challenges.
Yeah, lovely. Thank you. And I think we should just mention as well, obviously, Canada moved with the US. Any tips for us Europeans, Kevin?
Interesting. Yeah, a few observations, and that kind of triggered some thoughts as I listened on some of the previous panels as well. Canada, just by way of context, very similar to the US, similar results. It was predominantly a success. We've seen about 27 to 30% reduction in the collateral requirements in our participant and default funds. So that's some real meaningful savings from an industry, from a capital perspective. Fail rates, similarly to the US, I think there was a slide in a previous panel, just went up marginally, so we didn't see settlement efficiency compromised in any material way. I would say a few things, just anecdotally. Don't feel bad that the US pressure on Europe. Canada, we did no cost-benefit analysis. It wasn't even a question. The US sneezes, we catch a cold. We had to go. It wasn't a minute of debate. And especially since we have about 280 securities that are interlisted between the Toronto Stock Exchange and NYSE or NASDAQ that are about 30% of our average daily volume. And so that liquidity and stock list dependency made it extremely important that we get symmetry on the settlement cycles. One just observation on a lesson learned is we had a year from when Commissioner Gensler set a date. That's a very short period of time. I'm a bit jealous that you have 3 years. It might seem fairly daunting right now. Everybody's staring down the barrel of 3 years from now in 2027. But what we found was there was quite a bit of market disruption in terms of already in-flight initiatives, right? People set budgets, whether it's market participants, whether it's market infrastructures. There's long-term projects. We had a huge modernization technology infrastructure project that was 3/4 done. We had to go pens down on that because T+1 took a priority. And so even though you have 3 years of runway, I would highly advise everybody really be very diligent around looking at those especially those market-wide initiatives that touch a broad range of stakeholders, and be very thoughtful in terms of how you're planning out the rollout of those, and not underestimating the draw of T+1 in terms of resources across the industry. We had project teams went pens down, and even to get them to re-engage after T+1 was over was very difficult to get the right resources back, not only in our own institution, but across the market as a whole.
That's really good advice, thank you. And you mentioned collateral, Kevin. Have you got any sort of advice on collateral? So when we think about, it hasn't been mentioned really that much at all today, but it does support the ecosystem and the need for seamless fluidity in the collateral mobility. Any thoughts on that?
Yeah, I mean, I think in Canada, we're certainly less evolved than the UK in terms of just having collateral management infrastructure. That had been identified as a significant market issue for a while. A lot of the processes are manual around collateral mobility. very labor intensive, and the infrastructure just wasn't there. We've recently solved that by implementing a new collateral management system, where we had the first tri-party repo trades in Canada go up by the 5 big banks in Canada earlier this year, and we're doing that in partnership with our friends at Clearstream. So I think the market infrastructure to get the domestic market up to speed with global standards was one of our priorities. I certainly don't think that sounds like that's an issue here in Europe. I think what we are seeing and starting to look at, though, that back to that international, the mobility of collateral across borders and the demand for that amongst our domestic market participant base is increasing. We have a lot of our banks, the repo desks in London, want to be able to use Canada high-grade assets to be able to collateralize some of their funding requirements there, and vice versa. And that requires that interoperability linkages between the jurisdiction to get that efficiency of collateral mobility. So that's something that we're kind of looking a couple steps ahead in looking to facilitate.
Makes sense. And standards. So segue into standards. We all need them. There was reference to them in one of the previous panels. And back to the point originally, you know, we do have global standards. Are these standards sufficiently in step with current requirements? Do we need to improve, create new ones? It's a leading question to you, Chiara.
Thank you. Well, I think that we have actually good standards that ensure the level playing field so far, also across jurisdiction. Of course, considering the new global trends, we have been hearing about innovation a lot today, but we cannot forget about sustainability. I believe that the global standard needs to be updated, in particular the ones of market infrastructure. There is a need to start our reflections of if and to what extent those standards are really fit for the purpose right now in the global scenario. Also, and again, to ensure a level playing field across jurisdictions, and also to allow, in terms of European regulation, the simplification we were talking about, because the simplification way we were talking about is something that the industry is calling for. By the way, simplification should be accompanied with supervisory review, because otherwise simplification will leave room to different, to the re-establishment of different market practices. And in the simplification of the framework, of the positive framework, the global standards, revised, updated, and modernized, let's say, can play a role of a guidance also for, again, for ensuring level playing field across jurisdiction, not only across Europe, but also across the entire ecosystem at global level.
And I think regulation, I mean, is obviously it's late in the day and who needs regulation at 5:30, but, you know, it's part and parcel of how we operate in financial services. Do the regulations need to be adapted, Chris?
That sounds like a leading question, to be honest. So perhaps I'll give a couple of reflections, firstly from a global perspective and then European. I mean, the post-trade world is changing rapidly. You know, we talked today about innovation, new technologies coming in, and I know that there's a lot of work and a lot of thinking that's going on, but I think there's really an opportunity for the CPS and you know, other global regulators to start thinking about what needs to change for the future. Because one of the challenges, I think, from regulators is that they're always chasing what's going on. Now, there is a lot of thought and thought pieces which are out in the world at the moment, and I think there is an opportunity for the regulators to start to think forward a little bit in some of those areas. I think harmonization is a very challenging point. You know, we've spoken today about harmonization for regulation within the EU. Now that's difficult. If you then start to scale that up to think about the G7 or even all members of IOSCO, getting harmonisation really does become quite difficult. So I know Peter Snay has mentioned earlier about going back to a principle-based approach. And I think there's certain areas where that is absolutely right when you're looking to cover very broad swathes of the world. There's also work that we, the industry, can do. We know the industry, we know the business, and we can help to provide guidance and support to the regulators as they're going through some of these thought processes about how regulation can change. So I think it's not just down to regulators, it's down to us to also be part of that discussion. And I think that's really where ECSDA provides a very good input, providing advice on policy, providing advice on change, really does help the regulatory authorities, I think. If I come a little bit closer to home, I'm talking about convergence. So CSDR, it's been around for a number of years yet now. That is a degree of convergence. I mean, there are 27 countries and the UK, which all apply CSDR. And I think, you go back to the previous panel, there was a comment made by Olga about, whilst CSDR is broadly exactly the same across all of those jurisdictions, the interpretation and implementation of it, or expectation of it, I think is a key difference. So having something where the regulators start to get to a level playing field on the expectations between different countries or the application of it, I think is absolutely key.
But one point on CSDR, and it was back, I think, in June 2020 when Rishi Sunak had a statement saying we're not going to apply the settlement discipline regime for the UK, which was a high point, I think, for participants. Should convergence mean alignment or standards to, the direction of travel? Because clearly the UK is paving its own way right now, but still, I'm pleased to hear today with, close ties to the EU still.
So thank you. I mean, what's a conference without a discussion about Brexit?
I know, I didn't mention the B word though.
I mean, the good thing is though, it's getting towards the back end of the agenda as opposed to the forefront of the agenda. So that is a step forward. So a couple of things there. From a UK perspective, is there a push for regulatory divergence? No, I don't believe there is. I mean, if you look at the history of what was going on at the time, one of the things that the UK did was they onshored all of the regulations that were applicable and in place at the time that we got to the end of the transition period. Settlement discipline under CSDR came into force within Europe 2-3 months later. So one of the things that the UK government did think about is, well, that misses that cut-off point. Is it applicable or not? And given that there is, or continues to be, a well-functioning settlement discipline regime in the UK, it's been there since about 1998, it works well, we see good settlement rates. I think this is my words rather than anything the government's ever said, but my interpretation is we get to the same outcome. So why change something when you reach the outcome anyway? So that's one point of it. I don't think that was a deliberate, let's move away from what's going on in Europe for a competitive perspective. I suspect, or I'd be very surprised if settlement discipline doesn't come back onto the table at some point. T+1 or post T+1 may well be the catalyst for that. But at the moment, there appears to be absolutely no interest, either from the authorities or from the market, to look at it. Because, as I say, we've got this functioning mechanism there already.
It functions well, for sure. Yeah. Although we'll be watching for Mr. Douglas's report when that drops to see whether there's any references there. Data. Now, data hasn't really been touched on either today. So, Ekrem, I'd like to come to you. Do we need to have more global standards and convergence from a data sharing point of view? Because I think it's obviously very topical, certainly within the EU and UK region, but hopefully in Turkey as well.
Okay, thanks. First of all, I need to emphasize that data, we have a special data services. In our perception, Turkish CSD, we are trying to diversify all products and services, not like a regular CSD. Sometimes I call us CSD++ because we give services not only capital markets in CSD sites. We are giving service to agricultural products market and crowdfunding system, and even non-listed joint stock companies, bureau shares. We are keeping registry of them. And the second group of services and products are data services, because we are also a trade depository of Turkish market. As all you know, after the crisis in year 2008, it was defined in year 2012, the trade depository role, and in year 2015, in the Capital Markets Board of Turkey gave that responsibility to MKK, and we made it alive in year 2018. It has started actually first as T+1 reporting for derivative markets and swap data, but by years, in year 2019-20, we add some new functionalities: T+0 reporting, debt securities reporting, investor risk monitoring system, and we are collecting some other data from the market, from all financial institutions, just to build also capital markets risk center. Last year we started to establish a risk center with the Capital Markets Board. Actually, we are collecting data from all other parties. We already have lots of data as a CSD, of course, because everything is data. All our business is digital data. We are dematerializing. They are digitizing, and everything securitizing. Everything is digital data. We are collecting from all other companies and processing and reporting to related parties. If it is public, we share it. We have data analysis platform, and it's very transparent. Even the corporate website of MKK, if you right now open it, you can see the most updated data, which is automatically comes from the business intelligence tools after the end of the market day. If you open right now, you can see all basic numbers just on the main page of corporate website of MKK. We are sharing it. We have public disclosure platform, for example. All domestic or foreign investors can see everything about the market. Actually, our motto is data to information and information to strategy. We are trying to provide all strategic information, actually, to make it possible strategic plans of all other companies. We are sharing all the data. If it's public, as I said, we are sharing public. If it is a special reporting, we are reporting to Capital Markets Board or whatever. And we have also, as I told, we have also the third and fourth service and product groups, corporate governance services, and also investor relations services. All are combined with data services, because, as I told, everything is data. As the Turkish Markets Trade Depository, we extended it, not only the regular trade depository, as I told. We extended it too much, and I think it's very special to Turkish market because we are like a self-regulator. I'm not sure if it is a correct definition, but we are working very close with the Capital Markets Board. For example, another new thing will be the crypto assets regulation in Turkish market, and we are right now working with them. Actually, it's not a regular CSD role, because we are not issuing from the beginning, we will be keeping just the data. Again, I'm giving this as an example because we will be collecting data from crypto asset platforms, trading platforms, and also custody bank. And we will be keeping safe all the data investor-based. So maybe we can tell some things more if we go on with the innovation part. But I wanted to add it. It's not a regular CSD business. It's a mix of data and also securitization. Thanks.
Sure, thank you. I'm going to touch on corporate governance because I think that's a hugely important area. And Attila, I'm going to ask you whether there's sufficient global and regulatory and operational convergence in such an important area of corporate governance.
Actually, I think that's, in case of corporate governance, of course, I think that's a good example how the market can regulate itself. Because if you take a look at the European landscape, what is the differences between the corporate governance guidelines in the different countries, you can't see much difference, to be honest. And I think that's the good example. So, and I think that's what we need to, the regulator should to use this example, I think, in other areas of regulation. And I don't think that's mainly because I think it's really market-driven. It was driven by the investors in all countries. And it's the other issue why it works quite well, because it's flexible. It is much more flexible than any regulation in the EU. And that's I think the major problem. Just reflecting back, I think on the harmonization question, that why we don't have harmonization, or why it's so difficult to harmonize in Europe, is because I think the countries don't really see the incentive why to harmonize. Of course, we have this CMU, but it's too superstitious, I think. And if we take a look at a very good example is the Baltic markets. I think because they found something in small scale for that simple region, the Baltic region, what made sense for them, and they did whatever they could, and now that's a single region. They had the single regional classification from SCI, so from now it's no three single countries, but it's one single region, meaning that they can apply for the emerging market status. That was not possible for the tiny markets, tiny free countries alone. And I think that's what we need to, that's what we want to replicate from EBRD side in Central Europe. And that's what I think the bottom-up approach, that we need to find common ground, and in Central Europe, I think there is. We have the same roots, the same culture, more or less, and we can build such a similar structure, and we can bring together the trading, clearing, and settlement, and the government and the regulators, the same page, to create a single market. It's not single. It's not CMU on a European level, but it's a regional harmonization and integration. I think that can be done in maybe in other smaller regions in Europe, and maybe, I don't know, maybe that's the maximum what we can achieve, until there are so much differences between the markets in terms of the development level and in terms of the culture behind.
Brilliant. I think, we should, obviously time's ticking away, conscious of the time, but we should touch on DLT. Because, why would we not want to do that? It's been mentioned so well already today. But I think we look at it from a standards point of view, and how to achieve that consensus and convergence across CSDs. Going to start with you, Kevin. Is this something that CDS are looking at? And then, Chiara, over to you to take over.
Yeah, so it's 5:47, and I don't want to bore everybody, and we're getting late in the day, so I'll keep it really quick. My point on this topic is I think it's any interoperability and I think future connectivity between CSDs, and maybe more so even internet, like cross-jurisdictional outside of Europe with a jurisdiction such as Canada. I think new technology is going to drive that. I don't think it was mentioned around just, you can, as a CSD, we can open up an account in another CSD. That's a fairly well-trodden path and so on. But any incremental efficiencies and added value is only going to come from doing that with new technology. It would be my view. And so you have the HQLXs, you have the Canton networks, you have things like that where I think that's what's going to drive the future kind of connectivity and bridging between different jurisdictions from a CSD perspective. So those are areas I think of where we're interested in. The other thing, just a bit more unique, I do commend the European landscape in terms of being really at the forefront, I think, of that kind of tokenization, decentralized type of technology models. In Canada, we can only go as fast as our market participants are willing to let us go. So there's a little bit of an issue there where we can't look at doing that on our existing infrastructure base or with our core services. And so obviously, we're trying to take the market along on this journey in terms of getting comfortable with digital technology, smart contracts, automated workflows and that type of model through small proof of concepts in the private markets, an area where we're not. So it provides us an opportunity to diversify and bring new services in the market where we currently don't play a role, being the private markets as opposed to the public markets that we serve, but also at the same time bring familiarity and build some acumen around the domestic market in new technology.
Lovely, thank you. Anything to react with, Chiara?
Yes, I believe that in particular regarding DLT, I'm not going to the detail of the operational aspects that he touched upon, but I believe that there is a dimension that also Daniela touches upon during her speech, the governance one, that is the most relevant one in terms of risk management and in terms of the definition of the model under which these new technologies will be implemented. And here, I guess that the cooperation across the market infrastructure to define the proper governance model could be could play a key role in this respect. While we might compete on use cases, on operational aspects and definition of business model. In terms of governance, I guess that the international cooperation and again the standards that needs to be updated and needs to be adapted to this new potential model are a space where we can contribute all together and establish also new way of collaborating, as I see also in some areas in the Far East.
Lovely, and you both just mentioned collaboration, which I think is a lovely way to end this panel. And maybe Chris, I can turn to you. I think collaboration, self-regulation, whatever it may be, we've explored a few of these themes today, but collaboration is a great way to achieve integration and convergence. Could you maybe give some insight on some work that you, Clearstream and DTCC have done in this space on DLT?
Yeah, certainly. So I think the paper's been mentioned 3 or 4 times during the course of the day. I mean, one of the rationales behind it is if you look at what's going on in DLT at the moment, I mean, everyone is or has done or will do a proof of concept. We're not far from these things starting to scale up into the core business of the CSD. So making sure that we've got the frameworks around that so that we don't end up with, say, pools of digital liquidity in different sort of DLTs or however they are isolated. Because if you end up with isolated pools, it introduces cost and inefficiency, which is what we're trying to get away from by the use of DLT. So I think as CSDs work together in some of these areas, and I think the work that DTCC, Clearstream and Euroclear have done in that space is really good. It's a really useful set of documents. There was a document that came out in about September 23, which started to set a little bit of a thought piece. This year in May, there was a blueprint that was issued, and Daniela actually went through the 6 key principles within that earlier. And I think it's important that we take these matters amongst ourselves and actually continue to refine how we can collaborate together and set standards or blueprints so that we can actually end up with the right answer, which is DLTs that work for everybody rather than, as I say, some bifurcation or dislocation.
So it's taking matters into our own hands with the experts in our market, self-regulation, principle-based, collaboration, recipes for CSD operational and regulatory convergence. So I think we've 42 seconds over, that was a marathon, but we did it. So thank you so much, panel. I think, brought some great insights to the day, so thank you very much.
Thank you.